All right. Hi, everybody. This is Sunny Aguilera. Good afternoon. For some reason, my camera does not seem to be working quite well at all. Don't know why. So, apologize for not being visible. However, uh, do thank you all for joining here today. Very excited for this to come back. There are some differences from the original go around that we're going to discuss in our slides. We will also send this out to you via email if you request it, so you have it as well. So let's begin. Start with California Dream for All, 20% down payment assistance program. I am Sunny Aguilera. I'm sales manager here at our office in Stockton. I've been approved as a Cal HFA lender for over the last 10 years. Been in the lending business for the last 30. Yeah, I am that old. Don't laugh. And do a lot of work all over the state, helping people finance not just with Cal HFA, but with other down payment assistance programs and other local entities as well. Next. So on today's agenda, we're going to talk about the California Dream and the Dream for All, the program eligibility, some now and later examples, and also how to get registered for this. This will be a lot different in terms of its functionality than it was before. And we'll go through those steps here through the slides. So you'll have a full understanding of what it will take to have a better chance of getting it this time around than last time. So what is a Cal HFA Dream for All? It is a down payment assistance loan. It is available to first-time and first-generational home buyers, which we will get into those details. It is used jointly with the conventional first mortgage only. Now, Cal HFA is the entity. A lot of people get the term FHA confused with Cal HFA. FHA is a loan type. The only type of loan that is available for the Dream is a conventional loan product through Fannie Mae, okay? Not Freddie Mac, because there's two entities. So this is a Fannie Mae backed loan product. Now the appreciation trigger will take place upon the transfer, the payback loan, or the share when it triggers of the appreciation. But we'll talk more about that as well. Okay. So the Dream for All program, it's a revolving shared appreciation loan program that provides loans for a down payment to qualified borrowers. Upon the sale or transfer of the home buyer repays the original loan amount plus a share of the appreciation in value. So, examples, if the loan amount is up to 20, the loan amount will be up to 20% of the sales price or appraised value of $150,000, whichever is less. So, the amount of the Dream will not exceed $150,000. So for those people in the Bay Area, if you are buying a home for $1 million, the maximum Dream you can get, if you are selected, is $150,000. So keep that in mind because you will have PMI, which we can discuss as well. Okay. The maximum debt to income ratio is 45% for scores under 700 and 50% for scores 700 or higher. Now, this is a total debt to income ratio. So what that means is that if you make $10,000 a month, $5,000 of your pay can go towards things like your credit card bills, your car payments, your student loans, and your mortgage payments. So if you have very little to no debt and the system approves you, you'll be eligible for a mortgage payment of up to $5,000 a month. Okay. Now, the minimum CLTV is 95% and the maximum is 105. So Cal HFA has capped this. You can only bring in 5% of your own funds now. That is 5% of the 5% of the down payment. Okay, that's it. That's all you can bring in. So again, $1 million home, you can bring in $50,000 of your own funds. You can use 150,000 of the Dream, and you have 20% down. Okay, and the maximum CLTV of 105. So if your client who has very little money for a down payment, okay, you can do you can use 10% of the Dream, for example, Say you use 100,000 of the dream, say $1 million pretense to cover the down payment portion, and you use 5% to cover the closing costs, to maybe buy out the PMI, to equivocate it to 105% cumulative loan to value. All right. Now, non-occupant co-borrowers and or co-signers are not allowed. So anybody who's going to be on this loan must reside in the home with you. And property types include single family homes, one unit residence, condominiums, and townhomes, and they must be approved condominiums, okay? Properties with ADUs are eligible, and manufactured housing. Now, manufactured housing, by Cal HFA's definition, is home that fixates itself to land. Mobile homes in mobile home parks are not allowed. Manufactured homes in mobile home parks are not allowed. That property must affixate itself to the land in which it sits upon, and it must be one as a whole. Otherwise, it will not be eligible. Tenants in common, which is common, very common in San Francisco, is not eligible either. Nor are mixed-use properties where you have a home on top and you have a storefront on the bottom. Those are not eligible either. Okay, so please keep that in mind. We do get a lot of questions about TICs in particular. Okay, now here is the biggest change to this program. First generational home buyers, by definition, all borrowers must be considered first-time home buyers. Okay. One borrower must be a current resident of California. The borrower has not had ownership in a home in the past 7 years in the United States. And to the best of their knowledge, their parents do not or did not at their time of death have any present ownership interest in a residence in the United States, or the borrower grew up in foster care. So, as I've explained to a few people, because there are a lot of people who are not happy about this particular rule, what Cal HFA is trying to do is they are trying to help people who they feel are undeserved or don't have the means to build generational wealth for their families. In the first go round of the dream, Cal HFA, running their metrics, discovered that more than 50% of those people who were eligible and who obtained the first part of the dream last year were first generational home buyers. Their goal with this is simple. They feel that if you have parents who own property, then you are more than likely to obtain that property through death of ownership. So your parents are going to leave you the family house. So at that point, you have the ability to become a homeowner through the passing of title over to you. So in doing so, your parents have already created a generational wealth for you. And because people who don't have parents who currently own a home cannot pass that ownership down to them, that's why Cal HFA is doing it this way. They feel that they are giving the masses a better opportunity to start this for their families, so that way their family, in the long run, over generations, can obtain wealth through home ownership. I hope this is a good explanation for you. And of course, if you need more definition, we will answer your questions. And we'll get to the Q&A. We'll get to the chat as well here in a little bit. Okay. So, loan delivery and registration system. So this is also something that is going to be very, very different from the first go round of the dream. Last year, it was a free-for-all. It was first come, first serve. It was get in a contract and try to lock and register your loan so you can secure the funds. This year, you'll have plenty of time to do so, okay? So once we get the information, we will pass this on to you on how to register through the portal that Cal HFA is creating for all those who are interested in the program. We do expect, per the conversation on the call today, the portal to be open for 25 to 30 days. So you, as an individual, will have 25 to 30 days to create your profile in the Cal HFA portal and to download all the proper documentation to be eligible for the lottery. Okay, this is a random selection. If you're the first one to register, it doesn't mean you're necessarily going to be the first one chosen. This is a lottery-based system. It allows borrowers to secure a voucher for the reservation before entering the contract into getting a home. Okay. You then have 90 days to shop and reserve a loan. That means 90 days to get into contract on a purchase. This is for a resale home or a new build, and we'll talk about new builds a little bit as well. And the anticipated portal opening date is spring of this year. So they haven't given us a definitive timeline when the portal will be open, when they will start accepting these reservations and these requests for the lottery, and when they will start distributing it. Obviously, we will update you as we get those, but the main thing now is between now and I'm going to say April is to start applying if you haven't done so already, and for us to get you approved for a certain amount, so that way you can have your approval in hand ready. So when the portal does become activated, you can put your information in the system and be eligible to be chosen. Okay. Now, this is a copy of the approval letter that Cal HFA will require you to have. What Cal HFA said today was that they didn't want a bunch of people applying who do not have this letter. If you do not have this letter signed and filled out by an approved loan officer and lender like ourselves, you will not be eligible for the lottery. You have to get an approval. Most of you on this call already have at one point gotten approved by us. Some of you haven't. We will be more than happy to start issuing these letters to you. Now, these letters will have a provisions, certain things like when we qualify you for a certain amount that is based on the rate of the day, that is based on your current income, that is based on your current credit threshold. So all these are based on what's current now. Obviously, between now and the time you may be selected, things could change. Rates could go up or down. You could have purchased a car. So if you are selected for the lottery, we will have to revisit your numbers. We'll have to re-update everything to make sure of your viable approval amount. So please keep that in mind. And of course, if you do anything like make any large purchases, buy a car, if you change jobs, just make sure to let us know. Make sure you keep all that documentation handy so we can have it for your loan file. Now, one thing that is and has changed as well are the income limits for the Dream. Now, Cal HFA, the My Home program, has a different income limit than the Dream. The Dream is slightly lower in many of the cases. For example, Santa Clara County on the My Home has a $300,000 income limit. However, for the Dream, it's slightly lower at $287,000. Now, the one thing that we've learned in using these Cal HFA products is they do not base this off household income. Okay. There have been many people we have helped who have talked to other lenders who have been told that they do not qualify because they make too much money. Well, with us, that's not always the case, because we were able to find ways and work angles to which we only use income that we have to validate. Also, if you as a client or you as a realtor have clients or receive RSUs, in, I'm going to say 99% of the cases that we see, RSUs are not counted as income. So for example, if you work at Facebook and your base salary is $240,000 and last year your bonus was $40,000 and your RSUs are 100, we're only going to count your $240,000 base and your $40,000 bonus. And if you're buying in Santa Clara, guess what? You still qualify. So many people do not call us because they think they make too much money. Or say that you make $280,000 on your own, but your spouse makes another $100,000 and that puts you over the income limit. Well, guess what? We do not have to count your spouse's income. We can base the approval off your income only. We can still have your spouse on the loan and on the transaction with you, and you can still be eligible for the Dream. These are a couple of things, just a couple of angles that we've worked over the years to help more people qualify for these products, to get assistance and to get into their homes. So this is based on the counties that you are purchasing in. So if you make $280,000 and currently live in San Jose and are looking to relocate to, let's say, San Benito County, let's say you're looking to relocate to Hollister. Well, if you relocate to Hollister, which is in San Benito County, you will make too much money and not be eligible. So remember, the income limit is based for the county in which you are choosing to purchase. Keep that in mind. Very important. Now, how does it work in terms of the payback? So the home buyer must repay the original down payment amount plus the shared appreciation and value of the home. One question we do get is that, well, what if what if we sell for less than what we purchased? Well, if you took out $150,000 of the dream and you purchased the home in $1 million and you ultimately sold it for $950,000, you still have to pay back the $150,000. There is no appreciation to share, therefore, there is no appreciation to pay back. There is a one-time refinance, rate and term only, that will allow you to refinance without having to pay back the dream as well. So if rates do go down, which they're anticipated, quote unquote, to do so, and rates do drop enough to where it does benefit you to refinance, you can do so without taking any cash out and not trigger the repayment of the dream. Now, this is a zero interest loan and it is not forgivable. So do remember that you are going to have to pay this back. Under no circumstance will this be forgiven. So here's an example. Here's a graph of how the shared appreciation works. The Dream for All provides a loan of 20% of the sales price, which was the $500,000 purchase price. The homeowner pays back the original loan amount plus 20% of the appreciation in value. So as you can see in the graph, if you have a home value of $500,000 and you get $100,000 of the dream, you have a first mortgage of $400,000. Say 5 years later, your home appreciates to $640,000. Your home appreciation at that point is $140,000. Homeowner share of appreciation is $112,000, and the dream gets $28,000. So homeowner sells the home, you owe $370,000, you pay back $128,000, your equity is $142,000, and that's what you net out. So it shows you on this graph how everything breaks down in terms of the repayment, and that's how this works in terms of the payback. Now, the maximum appreciation you can owe is 2.5%. So if you borrow $100,000 of the dream and say you hold on to it for 15 years, and at some point you either refinance or sell the home, and your home, goes up, 3 times of what you paid for it, the maximum you pay back is $250,000. So it's $100,000 of the original loan amount plus $250,000 of the shared appreciation, for a total of $350,000 that will go back to Cal HFA. Now, one of the goals of this is eventually, the goal for Cal HFA is to have this program roll out every year. As time goes on, more and more people will pay back their dream. So eventually, they're thinking 7 to 10 years down the road, the money pool will be enough for it to recycle itself, so the program can continue ongoing like the My Home. That is the ultimate goal of this program, is to be self-sustaining like the current My Home program is, so people will be eligible for this at any time, not just during select times like we have now. Okay, so here's an illustration of conventional loan or standard conventional loan versus the California Dream for All program. You have a home sale price of $450,000, minimum down payment of 3% at $13,500, the typical closing cost of 2 to 3% of the sales price. Expected cash to close $22,500 to $27,000. On the flip side of that, you have the same loan with the dream. You hit 90% or 20% down, $90,000 down, and expected cash to close could be $0 to $12,000. It depends how you use the funds. Again, you can use 16% for down payment and 4% to cover closing. Okay, so if you want to come out with absolutely zero money, there is the potential to do that, especially if you have very little money to work with. So this is another benefit of using this program. It helps those people who have $10,000 or less still be able to get into a home. Great news. Now, the home buyer education requirement. This is something that we suggest you start now. The 8-hour course that's available, we definitely want you to start it now and get the certificate now, because last year, the agencies were 2 months behind during the height of the dream. The last thing we want you to do is to get in a contract on a home and not have your certificate, because at that time, we do not know, nor can we anticipate how long it will take you to get that certificate. We do not want your closing to be delayed. Therefore, we highly recommend that you attend the 8-hour homebuyer course through Cal HFA. It's available on the website. The link is, and you get your certificate. Okay. Now, once you are selected, if you are selected for this program again this year, then we can send you the link for the shared appreciation course. It takes about 30 minutes to an hour. It is free, and that one does not require an interview. Once you complete it, pass the little quiz, you get the certificate. So that one does not have to be taken right away, nor do we recommend, but you can if you want to. I mean, there's no cost, so it doesn't, that's up to you. But we highly do recommend that you take the Cal HFA mandated eHome America first time home buyer course. Start it now and try to get your certificate as soon as possible. And lastly, we're ready. So we're ready to take applications now. If you've worked with us in the past and we qualified you before, we're ready to requalify you. We just have to have you send updated information like your newest pay stubs, your 2023 W-2, what if you have it already or when it comes out, and your last 2 months bank statements or any investment account statements that you'll be using for this transaction. Okay, so let's go to the chat. All right. And I don't see any questions at this point. If there's any, will this recording be emailed? We will try to email the recording, but the slides definitely will be sent out to everybody who's in our database. You can also email us a request and we'll send the slides out for you. Okay, does anybody have any more questions they'd like to put in the chat? How many days to complete the approval process? I'm going to say right now we're probably going to be about 2 to 3 days in review and approval time. I mean, you still have plenty of time applying now to get your approval letter from us and be ready when the portal allocation drops and you're able to, upload your information. You have plenty of time to do so. Now, I will say this, that if you are somebody who has, maybe need to work on your credit a little bit, or maybe not all your money's right, or you're maybe changing jobs, we want to definitely look at this now for you and maybe help you prepare. So that way, maybe 2 months down the road, we can, put you in a much better position to, be able to be eligible and take advantage of this program. Okay, but right now I'm going to say about 2 to 3 days, business days, that is. Any other questions? None? Okay, well, I would like to thank everybody for joining us today. Again, if you would, we will send the slides out, but if you do not receive them for whatever reason, please email us and we will send them to you. We will, be happy to answer any questions that you have. It's all pretty simple. This is a conventional loan. Please do remember that. If you do not meet the conventional guidelines, if you have a credit score under 660, if you're low income, or 680, if you're not lower income, you will not be eligible. So please keep that in mind. You must meet all the first-time homebuyer requirement rules. You must meet all the conventional guideline rules. If you have student loans and you are not in an income-based repayment plan, please get into one at the lowest possible payment now. Do so now. That way, by the time you're ready to enter the portal, you'll have an adjusted lower payment on your student loans, which will help you qualify for more home. And of course, let us know if you have any questions. We'll be here to answer them. Email is good, text is best, and we'll do what we can to help as many people as possible. Thank you very much for your time. We appreciate your support in this, and we look forward to helping everybody who we can. Have a great day. Thank you, and God bless.